I'll be the first one to tell you that focusing on operational efficiency isn't nearly as sexy or exciting as lots of other business opportunities. But that doesn't change the fact that it is critical to all businesses and especially finance organizations. Hi, I'm Jennifer Peak, founder of the CFO School, and I help CPAs become high-performing fractional CFOs. By the end of this mini training, you will know 5 ways that you can streamline your finance organization, whether that's part of your specific fractional CFO team or whether that includes members of your clients' teams. And you'll want to be sure to stay till the end where I tell you the one thing that could derail all of your efforts when it comes to streamlining your finance organization. Before we dive deep on the 5 ways that you can streamline your finance organization, I do want to take a moment to talk about some of the challenges that fractional CFOs can face when it comes to implementing the 5 things that we're going to talk about. Key reason for that is, in a lot of fractional CFO situations, you aren't the only person on the finance team. In a lot of cases, you may have your own team that's part of your firm that's doing, say, some of the accounting and bookkeeping processes, and that makes it a little bit easier. But in a lot of situations, or at least a fair number of situations, you're going to be working with clients that has at least one person inside their company that's a company employee that is performing key tasks that are important to you being able to do your job. Now, that might be an accounts receivable clerk, an accounts payable person. It could be a general office manager. It could be any combination of those things. But the point of this is that it can sometimes be a little bit more complicated to implement some of the things that we're going to talk about because you've got this variety of people on the team. That doesn't mean it can't be done. You might just have to get a little bit creative. So as you're listening to this mini training, I really encourage you to think about the opportunities and not the obstacles. So with that as a background, let's dive into item number 1. Our first streamlining opportunity is to minimize handoffs. There are handoffs that can happen between systems, there are handoffs that can happen between people, and there are handoffs that can happen between systems and people. Now, when I say handoffs, what I mean is anywhere in a process something is being transmitted, transmuted, or delivered from one part of the process to another that is not internal to the same system or person. Some examples are, let's say that you have a purchasing person who is providing key information to an accounts payable person. Anything that is being given from the purchasing person to the accounts payable person, that space in the middle is the handoff. And for every handoff that you have, an opportunity for miscommunication and inefficiency exists. The other thing that can happen in handoffs is that there is an opportunity for the data to become distorted or disrupted. So some examples of this are if you're downloading information from a financial system into an Excel file, once that Excel file is created, and let's assume that it's being created completely and accurately from the system and that there's not an issue in the download. Once that Excel file is created, that data is now available to be changed by a whole bunch of things that aren't in the financial system from which it originated. So there's a couple of handoffs there. There's the one from the system into the Excel file, and then there's everything that can happen in the Excel file after the fact. Other handoffs can be system to system. So if you have a project management system and a financial system, and there's either a manual upload process or even an API that may be put in place, there's an opportunity in that space in the middle for things to get disrupted, and even some data can be invalid. Those are all things that create inefficiency in the processes and systems. What inefficiency can look like is rework, additional checks and balances because people don't trust the data, differences in results or reports from one system to another or from one person to another, inconsistency over time in the process itself. It may not lend itself to a pattern that is easy to determine, but the more that you can minimize handoffs, the more that you minimize the need for all of those extra checks and balances to come into play. And as you can imagine, all of those inefficiencies start to pile on top of themselves. So the way to really address that is to start at the beginning, review your processes and your procedures for where there are handoffs happening. You want to minimize the number of them, minimize the times that they happen, and really work on the preventative part of that process instead of putting a bunch of detective controls on the back end to make sure that everything is running along smoothly. Streamline opportunity number 2 is to optimize existing processes. Now, this is a critical step because you can really identify and correct a lot of inefficiencies that exist without having to completely overhaul everything that's being done, or even take advantage of the other streamlining opportunities that we're talking about. This can be done with existing personnel inside of day-to-day activities. This is where you can find outdated processes and procedures that really don't add the value that they used to. This is where you need to take a look at all of the reports that are being done and delivered. Is anyone actually using them anymore? Honestly, one of the tests that we used to use when I was in corporate, when we weren't getting questions about the reports that we were delivering, we just stopped doing them. As soon as somebody asked us why they weren't being delivered anymore, we could then go into a discussion about who needed them and what they were doing with them. But I'll be honest, 80% of the time, nobody missed them. Now, I want to be clear that that seems like a very sort of dramatic way to approach it. But these are reports that have been done for years, and frankly, we didn't think they were being used because they'd really been replaced by some other things. So we had gone through a little bit of the rationalization process on our own, and then we used kind of a dramatic way to assess it with our customers on the back end. You don't have to go quite that far when you're optimizing processes, but what you do want to do is take a look at what's being done and ask the question of, why are we doing it this way? What information is it giving us? What decisions are being made as a result of that? Is there a better way to do it? It's possible that that better way is already in place. You can just stop doing the old process. In the event that it's not, you'll want to take a brand new look at what you're doing. I'll tell you, one of the best resources that you can have in any position in a company, and especially in a finance organization, is to have a new hire who is asking questions without already having experienced the existing processes and procedures. They're coming into the situation with a completely new take on things, and it's great to be able to leverage that. In the event that you don't have that working to your advantage, you can still ask those questions that I just walked through. You can also take a step back and say, if this, whatever this is, wasn't in place, how would we design it or create it today? What would we want the effort to be based on the outcome and the profitability impact or the decision-making impact that this is going to have? Now, of course, there's lots of processes inside a company that don't really stand up to those questions. Things like processing AP, applying customer payments, customer invoicing, some things like that. And I also know that some of the processes are going to be limited by either the availability of the personnel, the skill sets of the personnel, or the limitations of the financial systems. But you can get creative. Find efficiencies where you can, and that will certainly go a long way towards optimizing the processes. Streamline opportunity number 3 is to leverage automation. There's a reason that I talked about optimizing processes before I talked about leveraging automation. And that's because I believe that a bad process can be automated just as easily as a good one. It's critical to remember that automation is really only designed to do 2 things. One is to eliminate some of the manual and tedious tasks that previously were done by, the human being factor. The second one is to make those things go faster with less interference or input from human personnel. Like I said, you can automate a bad process. You can make a bad process go faster. The reason to optimize your processes first is so that when you start leveraging automation, you're not perpetuating those unoptimized processes inside of technology. I will tell you that automation looks like a lot of different things. It can be something as simple as expense reports. It can also go all the way to ACHs and EDI transactions and really voluminous things. It could include implementing an API between a project management system and a financial system. It could include a complete overhaul and the implementation of an ERP system. All of those things are possible. The one thing that I do say, in addition to all of that about leveraging automation, is making sure that you also rationalize your tech stack. It's very easy to start cobbling together different components that make certain individual processes more efficient, but don't really add to the overall efficiency of the company as a whole. That can happen inside a finance organization as well. So as an example, you may implement a new expense process that's automated. It can be something like a Concur or something like that, that is really bringing all of the transactions in. And those are great. And those are especially important if you have a large sales force or a large field team where you have a tremendous amount of transactions from a whole bunch of different expense elements, credit cards, hotels, things like that. That doesn't make the rest of the finance organization more efficient. It fixed one element of a key issue. So when you're looking at other items related to, say, the financial system as a whole, you'll want to make sure that you're revisiting the decisions that you've made from a technology and an automation perspective in things like expense reporting. Those are all elements of leveraging automation. The other thing about leveraging automation that you're going to want to keep in mind is that sometimes it can result in a change in your processes. Now, there's absolutely nothing wrong with that, but you'll want to be careful as a fractional CFO that that's not introducing some additional element of risk because you've removed some of those human controls that are inherently part of the process. It's really simple for those to get overlooked. And you'll want to make sure that your control items are mirrored as much as possible inside your automation solutions when you convert to something that's more automated versus something that had more involvement from actual finance personnel. Here we are. We're already at streamlining your finance organization, item number 4 in this mini training. Opportunity number 4 is to standardize as much as possible. Now, I think standardization can get really a bad reputation or can have a bad reputation. A lot of people think it sounds like a cookie cutter solution or a vanilla flavored report. And that's really not what we're talking about at all. Standardization really results in having an output that is consistent over time. It not only helps the audience, it helps the preparer. If you have a defined report format, that is an easy example of standardization. If you have a defined report format, your audience is going to know what to expect. It's easier to have multiple people trained on how to prepare and analyze the report. It's also easier for anomalies in the report to be found and considered. Those anomalies or those exceptions could be something that happened during the preparation process, but they could also be changes that are being driven by the business itself. In either case, the standardization is helping maximize the opportunity to identify, isolate, and address each of those issues. And standardization inside a financial organization isn't something new. In fact, I would argue, first step in standardization was the creation of the balance sheet and the income statement. I'll grant you that the detail lines in each one of those financial statements may vary from company to company, but a balance sheet has assets that equal liabilities and equity, and an income statement almost always ends at net income. There are a few exceptions depending upon industry and earnings per share and things like that. Everyone who is familiar with a balance sheet or an income statement knows what to expect from key line items. That means that you can then focus the conversation and the analysis and the transparency of those financial statements around the things that matter to a business. You have confidence that you know how working capital is being calculated over time. It can help you manage the efficiency or inefficiencies inside the operations because the financial results being generated by those operations is consistently presented. So there's all kinds of ways to standardize inside a finance organization beyond just the reporting elements that I've described. Standardization could look like key processes that are always done the same way. It could look like weekly Monday morning meetings to get a state of the union on where everything stands inside the company. Standardization can also look like staff reviews on a timely basis, critical customer feedback coming in through the same channel and in the same way on a consistent basis. It can look like credit applications that are required for all customers or certain type of customers. All of those are opportunities to standardize. And what standardization does from a streamlining perspective is that it eliminates a whole bunch of decisions that would need to be made inside a litany of customized processes. What we're trying to do is take the energy and the time and the possibility of error out of all of these unique things that have to be done and put them into a standardized process where the decisions around each of the elements are happening at the point of standardization. Then the energy and the time and the analysis can go into the results of those standardized processes and reports instead of into the creation of them over and over again. So it streamlines the process itself, but it also puts the firepower behind the energies and the dynamics and the decisions that are really going to move both the finance organization and the company forward more quickly. And streamline opportunity number 5 is to improve the staff's skill sets. Now, the reason that I said that I think this could be one of the more challenging ones, depending upon your fractional CFO situation, is because you may not have control over that decision. You may be able to influence it, but if those staff members are not your employees, but employees of the company for which you are providing fractional CFO services, you only have so much say-so over what happens with their training. Depending upon your arrangement with the company, you may have a lot of say-so. But in a lot of cases, you're not there supervising their day-to-day activities. They're performing a lot of work that is outside your immediate purview. Asking or requiring them to get additional training is something that you're going to have to manage a little bit differently than some of the other opportunities that we've talked about, because you're really talking about personnel decisions, and those can work a little bit differently. But the key here is that when you're talking to the CEO and you're really talking about why you want to improve somebody's skill sets, these are all things that will benefit the company. They will certainly benefit the employee, and that may be the pushback that you get from a CEO, but they benefit the company almost immediately. We're talking about improving skill sets that are integral to the jobs that these people have currently. We could also be talking about adding skill sets that are going to help them continue to move up in the finance organization. And those are all wonderful things for a company. Investing in employees is usually never a bad idea. And certainly other employees see that. It creates a culture around that. And that's more of the vague elements of it. But the very specific opportunities and what these skill set up levels represent for a finance organization to be streamlined is that through that training, these employees not only develop new skill sets, but they develop the ability to improve the processes that they are already working on, the ones that they already do day in and day out. So a very simple example is that you may send someone to Excel training. It could be advanced Excel training. It could be intermediate. It depends on the person and it depends on their job. The reason to invest in very specific training instead of investing in YouTube University or Susie teaching Annie how to do something is because they should really be learning some of those cutting-edge, best-in-class skill sets and not just relying on specific problem solving or even organizational legacy information. Now, like I said, this is one of those items that may be a bigger hill to climb than some of the other ones that we talked about. But I would definitely encourage you to think about your clients and the team members that they have. And if there are even small opportunities to be able to improve their skill sets so that they can be more efficient in their own job, they can propose changes to processes, they can stop relying on other team members for key elements of their job. So that not only improves one person's efficiency, but it also helps streamline other elements of the organization. Now I want to talk to you about the one thing that can derail any or all of those efforts. And that is doing a little bit of everything all at one time. So multitasking doesn't work. Having divided focus doesn't work. When we're talking about these streamlining efforts, oftentimes they are additive to what is already being done on a day-to-day, week-to-week, month-to-month basis. You will get more bang for your buck and provide more quick wins for your clients by focusing on small steps done quickly and done in isolation, done one at a time. And those quick wins are going to give you, your client, and all of the team members momentum around the next initiatives for streamlining or the next initiatives to improve the business, whatever those elements are. So I would encourage you not to bite off a big old chunk, make it a 6-month project, find something in every one of the 5 categories that we've talked about to start working on tomorrow. Really be precise, be discreet and definitive about what you're going to tackle first, what's going to give you the biggest payback on the fastest time frame, what is going to matter the most to your client. All other things being equal, that's a key consideration. And I would argue may move things up the ladder a little bit. Be careful about that. It will derail you faster than you have any idea that it's coming. And you certainly don't want that to happen when you're trying to streamline. I want to hear from you. Which of these items are you going to focus on first? And like I said, I really encourage you to get very discreet about what you're going to do. So tell me what that is in the comments. Be sure to like this video and subscribe to our channel for even more fractional CFO tips, tools, tactics, and mini trainings.